In 2027, Social Security recipients are on track to receive a massive 3.8% raise to their monthly benefits. That jump represents one of the largest benefit increases in nearly 40 years, an event analysts are already calling the Trump bump. Because of the sheer size of the percentage increase, the average monthly check will climb well above historical norms. On paper, this historic increase looks like a massive financial victory for America's retirees. However, the math reveals that this record-breaking raise creates a financial disaster for the exact people it appears to help. Social Security lacks an infinite pool of money, and the program is currently operating at a massive multi-trillion-dollar deficit. Every extra dollar paid out in these larger checks today carries a severe compounding consequence for the future of the program. To see how more cash right now leads to a massive loss of income later, we have to trace exactly what is causing this sudden surge in payments. Cost of living adjustments, or COLAs, exist purely to maintain a retiree's purchasing power by offsetting the effects of inflation. The inflation behind the 2027 bump stems from two major triggers, starting with the sweeping global tariffs enacted in April 2025. These new trade duties instantly raised production costs for manufacturers, which translated into higher, stickier prices for domestic consumers. The second trigger arrived in February 2026, when military action in Iran led to the closure of the Strait of Hormuz. That choke point closure caused a massive energy supply disruption, sending fuel and shipping prices skyrocketing worldwide. These macro-level foreign policy decisions cascaded directly into the domestic economy, artificially spiking the inflation metric that dictates the 2027 COLA increase. This spike is putting immediate pressure on the Social Security vault, specifically the Old Age and Survivors Insurance Trust Fund, or OASI. Under the current system, projected financial outlays are already crossing and rising steeply above the income collected from taxpayers. The OASI relies on a finite reserve of government bonds to bridge this gap, draining those assets to cover the deficit. Current government models predict the lifespan of this reserve, assuming normal, modest annual COLAs. The 3.8% Trump bump breaks these baseline models, forcing the program to burn through its finite reserves significantly faster to pay for the outsized checks. The massive 2027 COLA acts as an accelerant, burning through the OASI's only lifeline at an unsustainable rate. This accelerated drain means the exhaustion date for the OASI asset reserves has been violently pulled forward. Government models now project the reserves will be entirely depleted by the fourth quarter of 2032. The geopolitical policies that created the 2027 bump have moved a catastrophic financial deadline dangerously close to the present day. While the trust fund hitting zero does not mean Social Security will disappear, the legal reality is arguably worse. By law, the depletion of the reserve triggers an automatic, sweeping 22% cut to the benefits of all retired workers and survivors. This means the short-term 3.8% gain in 2027 leads directly to a devastating and permanent 22% loss waiting in 2032. Until lawmakers address the massive long-term structural deficit, an inflation-fueled raise effectively borrows money from a retiree's own future.